Hello and welcome to Building the Premier Accounting Firm. This is a podcast dedicated to helping accounting professionals start and build their premier accounting business so that they can offer quality accounting services and get paid what they're worth. This podcast is actually dedicated to helping you learn the various things that you should be working on in your business to offer those quality accounting services such as marketing, selling, pricing, training your staff, onboarding your clients, using technology effectively, retaining your clients, getting referrals, and so much more. In each of the episodes that we bring on the experts, individuals that have much to share as to what we can be doing to work on our business. And today is no exception. I actually have an excellent guest, Cito. He happens to be the founder, owner, and lead advisor of Back9 Advanced Tax Planning Solutions. Manos happens to have 25 years of diversified financial market experience, and Manos at Back9 ATPS works with CPAs that are frustrated with their work-life balance, concerned with fee comparisons, and are worried about the future of their practices. In fact, Manos founded Back9 Advanced Tax Planning Solutions after seeing so many tax professionals struggling to fight the grind of high-volume tax preparation and compliance services with their current clients. So first of all, Manos, welcome to the show.
Thank you, Roger. Great to be here.
This is going to be fun. Now, obviously, you come at this from a different perspective, being that you are more of a financial services expert. You 3 years ago saw a need to obviously create a tax division of your company. I'd just be curious, share with us a little bit more of why that emphasis and what led you to start that division of the company.
Sure. The traditional financial advisor accountant relationships used to be based on referrals, cross referrals, revenue sharing. That's become very, very commoditized. Everybody's got the best products, the best service from our standpoint, and accountants are inundated with guys like us trying to get into their client base. That said, I did have or do have other relationships with CPAs. But what we found was the referral business model was not really keeping up with the way the industry was going. And in fact, what I mean by that is the value-based billing and advisory services that CPA firms and the AI CPA are trying to move towards and away from just rearview mirror tax prep and compliance work. So in working with my clients, I noticed the trend of working crazy hours, especially during tax season, but not just tax season anymore. Fee compression caused by bigger accounting firms gobbling up accounting firms, as well as technology platforms for tax prep. And we noticed a definite need in helping the CPA offer more value-added services. They may have knowledge of these services and these solutions, but they may not have the the time capacity and or the resources to service their clients. So that's where we come in. We don't ask for referrals. We partner with the CPAs and we try and coordinate and identify opportunities for the CPAs to work through us and our virtual family office network, which we'll speak more about, in order to service their clients.
Well, one of the things I can definitely say is of all of my golden gooses where I get the majority of my referrals as I work with business owners is honestly the financial advisors. Those are the people that get the relationships with the business owners and find that they need, in my case, a business coach that can assist them with their business. And what's fascinating to me is the business owners obviously get to a point where profit is a priority. They're making money, they're being profitable, but then there's just all of these things that they need to consider as they make money as to what to do to be more strategic in their tax planning. Mm-hmm. And in doing so, from a company point of view, as well as an individual point of view, leverage the various tax laws out there to make sure that they're keeping as much of that well-deserved money that they've earned. So here's where I'd like to go. From an accountant's point of view, why is this relationship, do you feel healthy? Why would you find that your teaming with an accounting professional is in the client's best interest?
So, like I said earlier, the small to medium-sized accounting firms that are really our target audience, they don't have the time, and they also don't have the resources to have a relationship with not just financial advisors, but other experts in tax planning, such as cost segregation or R&D credits or employee retention credits,
Uh-huh.
ESOPs, all those higher level strategies that small business owners need, but cannot maybe get from their smaller accounting firms because of a resource limitation, or in some cases, an expertise. So what we do is we come in and we provide the CPA firm with access to our virtual family office network. And what that is that's a network that we've developed through a company called Elite Resources team out in San Diego, um, of highly skilled specialists in niche disciplines. So these are not accountants necessarily. These are not financial advisors. These are folks that focus on individual strategies, such as the ones I mentioned before. So in our network, we have one very high level expert in cost segregation. We have the same thing in R&D credits and so on and so forth.
Yeah.
I would be that expert in the financial services business. If the small business owner needs financial services, insurance, retirement plans, buy-sell agreements, all that type of stuff, I would be that expert. If there's other expertise needed, I bring them in and coordinate with the CPA. What that does is it reduces their time management needs and frees up their time to service their clients better.
Yeah, what you're describing is having a network of experts that allows the accounting professional to kind of niche into whatever they need help with as they're servicing their clients. So let's talk about your expertise. Obviously, you're coming at this more from a financial advisor role. And in the case of a client that is doing well financially, they're making money. Let's just kind of go through a few of the very quick, simple check boxes, if you will, of things that they ought to be considering if they're making money. I'm assuming you would start with maybe some of the simple things of, is your HSA fully funded if you're eligible to take part in an HSA? Are you fully funded in your 401k, for example, and max that out? Let's go through that list. Give us kind of just that quick checklist that might be helpful.
Well, I will certainly do that, but let me just say this first, if you don't mind. We don't approach the accountant or the small business owner on any individual strategy or service or expertise. We have a very defined process that helps us identify through a artificial intelligence technology process that what strategies and what needs that CPA and small business owner have. If it happens to be financial services, that's where I'll come in. And I'm that part of my business is called Back Nine Retirement Solutions, and I am an independent financial advisor. I don't have any product conflicts. I don't have any quotas or any proprietary products, and I'm a comprehensive advisor. I offer advice supported by product. I don't just sell product. On my investment management side of the business, I am a fiduciary and I'm a fee-based advisor. I do sell insurance and other commission-based products when necessary, but I do act as a fiduciary in all of my business. I am licensed for fee-based planning, which makes me fiduciary for that. We will sit down with the small business owner who is typically so busy within their business they haven't taken care of their own finances, and we will do a full fact-finding session, understanding where they are today, what their goals and objectives are, where some gaps might be. Maybe they're approaching Medicare, Social Security. Maybe they're not going to retire anytime soon because they love their business and it's just growing. Then we'll talk about succession planning, a lot of estate planning work we do to make sure that the small business owner can transfer his or her wealth and business onto their beneficiaries in the most tax efficient manner. We do traditional investment management, traditional life insurance, and so forth as well. But we like to try and focus on the more advisory areas of the small business owner, buy-sell agreements, and so on.
Yeah, so what you're describing there is a suite of services that you're doing. But what I want to get into is a little bit more of what that person would experience, because obviously you're looking at exit strategies. So that's what you were talking about there, is the various options that the business owner has as to when it comes time to maybe step away from the business, what options they could consider, buy-sell agreements and so forth. But when you look at more the immediate need, you've got that timeline of in between. And obviously as an investor, you have the ability to kind of advise them on what strategies to take to be diversified. What I was asking earlier is more from a tax strategy. what are some of the things that they should be maximizing in order to mitigate or minimize their tax liability? And so obviously those things were, like I was mentioning, the funding of some of those tax deferring type things, such as the HSA, the 401k. You just have a number of retirement type planning strategies that you could implement. And I was just curious if you had any thoughts on those, just in a generic context.
Well, yeah, sure. And to be honest with you, we do all that, and we approach it again a little bit differently. We don't ever approach it on a single solution or a single product basis.
Correct.
We look at it as a holistic and proactive approach, and that's why our technology will help us identify opportunities based on the answers the small business owner gives us.
Yeah.
So it may come out that they do not have a 401k or a SEP IRA.
Yeah.
Then we will help them prioritize that and implement that into their business, making sure they have proper insurance coverages. I'm not a property and casualty guy, but we work with a high-end property casualty company that would provide, workers' comp and liability and so on and so forth.
Well, let me do this then, Manos. Let me ask you this question. So if I'm an accounting professional and I'm working with a client,
Yep.
and I'm trying to help them understand that there are things that they can do to minimize their tax liability, what would I want to be helping them understand as I would introduce them to you? You've talked about this interface, this AI, I'm going to fill out a form. That's all fun and dandy. But what I'm talking about is this interaction with you individually. What is that for this person?
So that's what the process and the AI technology does. The accountant has a relationship already with XYZ business owner.
Uh-huh.
And he approaches the business owner and says, listen, we have partnered with Back 9 ATPS. We're offering more proactive and holistic, forward-thinking, advanced tax planning solutions that encompasses a wide variety of areas. Not knowing exactly what ones would fit you and your business, we have a defined process that'll help identify those. Once we identify those, we will prioritize them with the business owner and the accountant, and then we will attack them one at a time. So if it's financial services, then I am that expert, like I said earlier. And if it's an accounting tax specialty or solution, then I'll bring in the appropriate strategists that we work with in our virtual family office.
Well, obviously, I'm talking to you right now. So what I was wanting to do is see what advice you would have from your expertise. So what I'm wanting to know is, what are maybe some of the mistakes that you see business owners making financially as they're in a situation of being profitable, they're making good income, but they're not aware of the different strategies they could be using individually with their own financial winnings?
Yeah, well, so some of them are the very traditional things you mentioned earlier. If they have sufficient cash flow support, we always recommend we start with a retirement plan, whether it be a 401k or a SEP IRA program, depending on how large they are and how closely held the business is. We make sure those are fully funded. We will also look at their health plan, and if it is appropriate to add an HSA component to their health plan. Another way for them to put away extra money beyond the IRS 401k limits. We'll look at non-deferred comp plans in case they have a lot of cash flow and they want to add to their retirement beyond the traditional 401k and IRA stuff. And that would typically incorporate life insurance into their comp plans.
Yep.
And once those are kind of the basic stuff are laid out, then we'll look at how we can potentially save them taxes. One of the hot areas is cost remediation. Basically, in English, that is going into a firm, looking at all their expenses, from utilities to vendors to employees and so on and so forth, doing a comprehensive study and seeing where we can help them reduce and have significant savings in their expenses. They don't have the time to do that. They're working so hard growing and maintaining their business. These are the kind of things that fall through the crack. So I'm working with a nonprofit hospital as we speak, and we're doing a cost remediation study and we're going to be able to identify several $100,000 a year that they can save just by reviewing their expenditures. Um, so that's a very simple, but yet it has to be done properly, and we have that kind of expertise in our network.
Well, regarding what it is that you do, what are some examples that an accounting professional may not see when working with a client that the business owner would benefit from your specific services as a financial advisor?
There's nothing that is a secret sauce, if you will. Once we get beyond the retirement planning, 401k and IRA stuff,
Yeah.
we also make sure that we try to help them with client retention by offering them additional benefits to their staff, if it's appropriate, and if that's the thing. Keyman, very often, small business owners will have one or two key employees that are not necessarily business owners within the firm. They want to take care of them, make sure they don't lose them, because if they lose them, then they got to do training and interruption of business and so on.
Yeah. So let's talk for a moment about Keymen Insurance. Some of the people that are listening may not be familiar with what Keymen Insurance actually is and why, as a business, they may want to have that.
Sure. So let's say I'm a business owner and I sell widgets, and my number one salesperson does 70% of my sales business. That person's been with us for years. They're highly trained. They have great relationships with our target clients. If he or she were to leave, or if he or she were to pass away, or if he or she were to get disabled, that would have a very immediate and distinct impact on our business. So we will put insurance in place on that key employee, so that when and if something does trigger, we're able to at least have some financial relief in training somebody new and replacing that person, or making sure that person's role is expanded within the company, and try not to have as big of a financial impact as if we had nothing on them at all.
Yeah. A good example that I've also heard of Keymen Insurance that I've found very appropriate is, let's imagine that you've got two business owners and they have nearly equal shares in the business. The Keyman Insurance policy would be, what does the share value of that shareholder
Sure.
amount to, so that if that individual passed, the spouse,
Yes.
they don't want to necessarily step in and now start running the company. What they want to do is they want to have the insurance policy from the company's point of view buy out the spouse of those
Sure.
shares, and that way the spouse that had the shares because they inherited them with the passing of the business owner, they're not having to worry about coming in and running the company. They're able to now sell the shares.
Right. So that is similar to Keyman,
Yeah,
but that's not Keyman Insurance. That's buy-sell agreements.
correct.
So, well, a buy-sell agreement works a little bit differently. It's typically disability and life insurance on each partner, so that, like you said, if one partner passes, the spouse of that partner is not automatically thrown into the business.
Correct.
But yet that family and that spouse can get the value out from their deceased spouse, because the business now has the insurance to pay whatever 50% of the value of the business.
To
So
buy
we
the
would come
shares,
in and we
yes.
do a business valuation, identify a little bit of a growth projection on that business valuation, and put some insurance in place through an attorney, structured a buy-sell agreement. And if something were to happen to one of the owners, it would trigger the buy-sell agreement, which triggers the insurance, which trickles down and satisfies both the remaining business owner and the spouse of the deceased.
Yes, and in doing so, we've now protected both the company and
Correct.
we've protected, in this case, what we'll call the key man, if we will. So that's I think, something definitely worth considering.
By the way, Roger, if I don't mean to interrupt,
Yeah.
but what we do see a lot in terms of buy-sell agreements is a lot of firms. Yeah, I have that. If I die, this one gets that. They have something in their mind. It's not formalized, or it's formalized and not funded. So very often they think they have it, but they don't really have it, because if something happens, it's not executed properly or funded properly to do what it's supposed to do. So that's a little bit of a misconception amongst the business owners. Yeah, my lawyer and I talked about that. My brother-in-law is going to get the business or whatever, and it's more generic than it is formalized.
Yeah. And what you're describing there is just something that I think a lot of business owners aren't necessarily familiar with, but admittedly, they need to consider and maybe put into place simply because it's a risk that may not be present today, but it is definitely something that they need to be considering, right?
Absolutely,
That's
absolutely.
right. Let's talk about some other type of considerations. There's also deferred comp plans. One of the things that sometimes people don't necessarily consider, but as a deferred comp plan, you can take and have policies written that would actually insure some key employees where the company for the initial few years holds the policy. And then after the employee has tenured with the business for a predetermined amount of time, they can then take ownership of that policy. What can you share about something like that for employee retention?
Absolutely. We do most of that with professional practices, is like attorneys,
Yeah.
doctors, and so forth, because they have such excess cash flow, and they're limited to what they can put away for retirement in traditional solutions.
Yeah.
Um, there's two ways to really do it. One way is to do it through a traditional insurance policy with a death benefit, but more appropriately, in this case, it's a retirement vehicle. So we try and use a specialized insurance product for cash value accumulation.
Uh-huh.
And that will allow the contributions made into the policy to grow either based on a return of the investments within the policy or through dividends if it's a whole life policy. And that would build up a cash value over time. And when it's turned over to the ownership of the employee, they would have access to that cash value in a potentially tax-free loan scenario. So it acts as a we call a backdoor Roth IRA. Most highly compensated people are not going to be eligible for a Roth IRA. So because insurance has a similar tax advantage, we set up a cash value life insurance policy within the deferred comp plan, and that acts as a tax-free withdrawal opportunity without any limitations on when and how much. There's no 59 and a half. There's no 72 now, which is the RMDs. They can, and there's no, particular reasons you can take. You take it for whatever you want. You want to buy a boat, or you want to fund somebody's college or a second home. That's up to you.
Yeah, one of the things that I like about these policies is it's a great retention for a key employee simply because of the fact
Yep.
that you're saying, look, we're going to actually, as a company, fund the account. And as we fund the account, it's going to grow in principal, which before your death, you will later have access to that you can do as you described, go buy a boat with it because you're basically taking a loan from yourself and it's zero interest and you can pay it back, but it's basically impacting the net value of that death policy. But in the end, it's also something that for the first few years until the employee is tenured is basically a policy that the company is holding. But once
Correct.
they've tenured, all of a sudden now their benefactors have access to this death policy and the employee is sticking around because they're like, I don't want to give up this. I'm going to have in so many more years this policy that's going to be to my benefactors. And more importantly, I'm going to have access to that principal that I can now use for buying a car or going on vacation. It's just basically a free place to get access to funds as I get older. So great policy to offer to key employees in the company, one that I actually offer here within our company to one of our employees as well. So it's a good retention mechanism because
Absolutely.
you're not giving it to them as a payroll increase, but you're funding this account that has, yes, a death value, but more importantly, this cash access later on down the line. So very good. So we've got that. What are some other creative ways as a business owner I could look at either retaining my employees or taking care of my spouse, like these two things we've now just mentioned?
Um, the financial services arena is so inundated with compliance and with regulatory oversight. There's very few unique and how can I put it, secret sauce kind of
Uh-huh.
strategies beyond kind of traditional financial advisory services. Um, One way we do help them with that type of stuff is to help them reduce their tax while they're still working and their tax in when they pass in their estate. So we will try and maximize the amount of money for generational wealth transfer, and at the same time reduce the amount of taxes. Sometimes that does incorporate insurance. Sometimes it doesn't. Sometimes it's trusts. Sometimes it's donor and charity related. We do a lot of charity work with our business owners. We set
Okay.
up not necessarily foundations, but opportunity zone funds or things along the lines of donor advised funds, or what's not to get overly technical, what's called a CRAT or a CRUT. Um, those are estate planning strategies to remove certain amount of dollars from the client's estate so that when they do pass, they're either taxes are highly deferred or highly reduced or completely eliminated in some cases.
So now, with that being said, let me ask you this. I don't know if it's something that you're familiar with, but I do know that there are some donations in kind that can be done
Yeah.
by an accredited investor, where they can actually fund something that later is maybe like land donated, and in doing so they are able to take a tax value that is much greater than the initial investment and use it as a tax deferment mechanism. Are you familiar with that strategy?
Yeah. So there are trusts that you can move certain assets into.
Uh-huh.
Real estate is a very popular one, so that the ownership is transferred, but your control is still maintained.
Yep.
That's something that we look at as well. We have um, again, I'm not an attorney. I do the financial side of those kinds of structures,
Yeah.
but we work and coordinate with the estate attorney, either their own or one that we bring to the table, and we set those up. One other thing I didn't mention um, is we do a lot of highly appreciated asset donations. So what I mean by that is, let's say the business owner wants to donate some money back to his or her university, and they want to give over time. They want to give, I don't know, $25,000. They can write a check for $25,000. Fine, that's the most inefficient tax way to do it. They can also donate appreciated assets, and typically that's a stock. So if there's a stock in a portfolio that I bought at $1 and now that stock is $3, if I donate that stock in kind to charity XYZ or university XYZ, I do not pay capital gains, but I still get the full write off at the value that I transferred it at. So I'm basically getting credit both tax wise and from the university, pennies on the dollar. Right? I'm giving what cost me $1 at a value of 3, not paying tax on the difference, and yet getting credit for the full $25,000 of donation. That can be done with stocks, with art, with land, with businesses, any kind of appreciated assets. I use a rule of thumb: anything more than $5,000 that somebody wants to donate somewhere, we would look at appreciated asset opportunities to try and maximize that donation.
Yeah, that's one of the things that I find fascinating when it comes to tax deferment is these different strategies of where can I use either losses that have occurred in investments, or where can I use these types of donations to kind of minimize or mitigate some of the tax responsibilities that an individual has. And it's fascinating to me that it's I would dare say it's like a shell game, but I don't know if that's the proper analogy, simply because there's a creativeness to it. And as a financial planner, I'm sure you've seen numerous strategies over the years. Here's what I'd like to do. We've kind of had some technical discussions here. We've brought up some various strategies that might be new to the listeners, simply so that they're at least aware of maybe these terms if they hear them again. What I'd like to do is now kind of switch gears and talk about you as a business owner. Obviously, you've been in business now for 12 years. You've been running your company. You've taken some various strategies to run your business. What advice do you have to a fellow business owner as to what do you think has helped you be successful, and what advice would you have as to helping them work on their business?
One of the biggest things I see, either or I experienced in my beginning of my business as well as others I come across, is people do not run their business as a business. They either run it as a hobby or they run it as just trying to grow the business and not working on the structuring and the tax implications and the charity and the retirement and so forth. So while a person might be very skilled in, I don't know, commercial roofing, they're not skilled in the business side. So we really try and get the business owner to either hire somebody or work with outside advisors to work on their business instead of in their business.
So have you worked with a business coach yourself in the past?
I have worked with business coaches on my financial advisory side of the business. Yes.
Mm-hmm. So well, give me basically one thing that you've taken away from working with a business coach that you felt helped you in your business.
Time management of my calendar.
Excellent.
So from that, I block certain blocks of time on my calendar so that I'm not constantly looking at every email that comes in every time it comes in. I'm making calls to clients at certain blocks of time. I'm seeing new clients during certain days and blocks of time. I was previous to that, I was very haphazard. Somebody calls, yeah, I'm there. Somebody needs me on Saturday, yeah, I'm there. I still go overboard with customer service and availability, but it's a lot more structured. And what it's really done is my clients know when my appointments are. They know that I'm available for emergency, on my phone at night or on the weekends. But yet I'm very structured in my day-to-day activities. So that marketing is another area. I do a lot of marketing. So the marketing block is a couple days a week. I'm not a marketing expert, but I do put out a lot of different marketing pieces and marketing campaigns, social media and otherwise. So I think the time management is a big, big part of what I've learned over the years.
And I appreciate you sharing that, because time management is a very common thing that I think a lot of business owners struggle with. And so I'm sure a lot of them can relate to what it is you're sharing. And the principle of blocking out time, literally looking ahead into the future and delegating or designating specific time for particular projects, can really help you prioritize in your day what it is you're going to be working on. And like you were describing, rather than in being reactionary and just whatever comes up, responding to it, being a little bit more deliberate and intentional. I think all of us can experience or can reflect on those days that go by where you're very, very busy, but you probably didn't accomplish what it was you thought you would that day, right?
Well, that was me yesterday.
There you go. There you go.
I recently moved my office and got tied down with phone systems and Wi-Fi and internet connection.
Oh,
it's not in my block of time, obviously.
Yeah. Well, the day gets away from you that way. And what you think will take a half hour takes 2 hours. And so it just gets away.
Exactly.
So here's another question for you. With regards to your business, how do you think your business has afforded you freedom in your personal life?
So 2 things. One is I love what I do. Not to use the old cliche, but if you like what you do, you'll never work a day in your life. I wouldn't go that far. But I do enjoy my day-to-day, my job and helping others, whether it be my direct clients or clients of others through the accounting relationships. And the second thing, and probably overall theme, is the work-life balance. Previous to starting Back Nine, I worked on institutional side of Wall Street. There was no time management. There was no work-life balance. You came in at 7, you left at 5, you went out at night, you did it all over again the next day. You couldn't even get to the doctors or the dry cleaner. Now, I work 3 miles from my home. Sometimes I work from home. I make my own hours. I block my own time, like I just said. I'm a big golfer, hence the Back Nine name. And I make time for those things, but I use them as part of my business. So when I play golf, I'm networking. I'm trying to meet new people. I'm not one of those high-pressure sales guys where I'm trying to sell insurance in the men's locker room. But my work-life balance has improved tremendously, and it's just helped everything overall.
Well, now that you've brought up the golf, which is something I was going to move towards, you've got back nine. Obviously, golf is a big part of it. Where has been the best golf course that you've actually played?
Um, that's an easy one. I've been very lucky in my golf life, if you will, to have invites or access to some of the world's best golf courses. So the number one golf course in the world typically is between two courses, and one is Pine Valley, which is happened to be here in southern New Jersey, a very exclusive golf club that doesn't have any major tournaments, but it's always ranked in either first or second. And the other one would be Pebble Beach out in California. So I've played both of those. Pebble Beach a little bit more than Pine Valley, but I had an opportunity to play a very unique course in Sydney, Australia, called the Country Club in New South Wales, and I found that course to be the Pebble Beach of Australia, if you will. Rocks and cliffs and ocean and waves. It was just spectacular.
Love it.
And that's a little bit off the beat. That's not normally in the the world rankings as the other two are.
All right. So next, where's one that you haven't played but you're looking forward to it?
That's another easy one. I've been to the Masters down in Augusta numerous times. Luckily, through my Wall Street firm, we used to do client events and entertainment down there. But I've yet to be able to play it. It's next to impossible. But I haven't given up yet.
You're waiting for the invitation, I'm sure.
Yeah, Tiger. When Tiger needs a fourth, he's going to give me a call, he said.
There you go. There you go. What's your handicap?
It's about a 7-8 index at the moment.
Very good. And with regards to golf and business, how do you feel that golf has helped you in business?
Oh, tremendously. I didn't play golf growing up. I played baseball and basketball. I didn't start playing golf till after college. I learned early on that it was the best place to spend 4+ hours with somebody that you don't know well, that by the end of those 4 hours, you feel like you've known forever. People act on the golf course like they act in their life, whether they're hot-headed and throw clubs or curse, or they're just laid back and nonchalant, or how aggressive they might be in their shot selection. You learn a lot about people. And what I do not do is I don't sell on the golf course. I try and have very high level, friendly conversation, joke around, serious about the golf, but not to the point where I'm throwing clubs and cursing if I miss a putt. And you know what? There's a time and a place. So if you earn their trust and they like you as a person, you'll get the sales meeting in the appropriate time and place, which is probably not the sixth hole of the golf course.
Gotcha. And this is going to be similar, but not related to golf. Give me a meal that when you go to a particular course, you look forward to having that meal. Where is it? What is it and where is it?
Well, I've only had it once, and Pine Valley Golf Club that I just mentioned earlier as the number one golf club has turtle soup.
Okay.
I've never had it anywhere else, never had it since, but that was an experience for me to have the turtle soup at Pine Valley.
Perfect. Well, I can't say that I've had turtle soup, so that'd be something to look forward to as well. All right. So with that being said, I'm going to ask one last question. What does freedom mean to you?
Choice. So choice of schedule, time, recreation, work-life balance, being able to spend time with family and friends when I want to, not when I have to only. So it brings me back to something I forgot earlier. One of the things that I do a lot of is long-term care planning. That gives people a choice of where their parents might get the care they need. So they don't have to be the caregiver, but they can go visit their aging parent when they want and when they can, not when they have to. So if you take that concept into my everyday life, I think that's a big important area for me.
Very good. I like that. This has been a good conversation. I appreciate it. Let me do this. I'm going to kind of wrap things up here, and I'm going to come back to you for a closing thought. As I wrap this up, I just want to, first of all, point out that in the episode description, I'll be putting some things that each of you can take advantage of, and I would encourage you to go there. First of all, because Manos is offering something here that you can take advantage of, which is a free Q&A session as well as an initial discovery call to see how is it that as an accounting professional, you might benefit from working with a financial planner such as himself. And this would be a good thing for you to take advantage of. So you can go there to the episode description to get a copy of that. In addition to that, what I'll be doing is putting some information there as to essentially what you can do to get a book called In the Black. It's 9 principles to make your business profitable. It's specific things that you can work on in the short term, midterm, and long term to ensure that your business is in fact in the black and being profitable. This is a book that you can apply the principles in your own business as well as with your clients, and you can get a free copy of the book by going to the episode description. Now, as a summary, there are a variety of things that I'd like to point out. As a business coach, as an accounting professional, it's very common for us as we're working with our clients to experience profit and the business owner finding success, and now they are making money, and the biggest thing that they want to do is typically invest that money back into the company. It's the one thing that they have that's an asset that they can control, and they feel like they can just invest it there. Well, what we want to be doing as an accountant is working with a financial planner to help them realize that it's perhaps in their better interest to diversify that and actually prepare for retirement and give themselves options. And in doing so, there's a variety of strategies. And I think Manos has done a good job of introducing to us that you can take advantage of various systems and processes to determine what is the best recourse for them. Manos mentioned that there's this AI interface that they use with their clients to help them ask certain questions, and through those find out what their tolerances are, what their goals are, what their short, midterm, long-term plans are, and in doing so identify where those opportunities are for them to actually invest, plan, and strategize. The one other thing that I also took from this is we were discussing a variety of things that are not necessarily common knowledge, but they are definitely tools that you can use in the business, such as the Keymen Insurance policy, deferred comp plans. These are things that you can use to take care of your key employees, to protect the business in some of its vulnerabilities. And as a business owner, these are things that they may not be familiar with, but yet as an accounting professional, you can bring to their attention. The other thing that I thought was also helpful is the fact that there are different tax strategies that the business owner can take advantage of. And Manos was pointing out that he has colleagues that obviously are experts in those areas, such as R&D credits that can be used for tax purposes, cost segregation, just a variety of things that we actually have discussed in previous episodes that you can learn more about there. The last thing I'd like to point out is just the fact that as a business owner, he did identify one of the key things that I think all of us need to be sensitive to, and it's time management. Each of us have 24 hours in a day to work, and we have sleep that we need to take care of. We've got just life in general that we need to do. And so we need to be better stewards of the time that we're each given to make sure that we're putting things in proper order and prioritize them accordingly, and just getting the things that need to be done right. Now, with that being said, I do want to obviously thank Manos for his insights. I think the perspective of a financial planner is helpful for us as accounting professionals to just realize that we're working so hard with our clients to help them make money. It's what they can do with it next that really can be beneficial to them, because they're happy to make it, but then what? So, Manos, do you have a closing thought for us today?
I do. Roger, I didn't mention you earlier, but if I get any interest in that consultation from some of the folks online, I will also offer access to 1 or 2 different educational series, webinars, and/or email series that I offer to accountants. There's a variety of topics, and we can review those, and I can send the appropriate ones out free of charge to anybody that reaches out and wants to have that free consultation.
That's beautiful. You know, all these types of resources are helpful, and I appreciate you doing that. So let me do this. As we wrap this up, I just want to first of all encourage you, if you've not already done so, definitely subscribe to the podcast. This is something that we release each and every week, and with your subscription, you'll be notified as to the new episodes that are being released each and every Wednesday. And as the episodes come out, they are basically interviews, discussions with the experts, people that you need to be familiar with, things that they're helping us understand so that we can, in fact, have the premier accounting firm in our area. So with this in mind, just look at this. If there are different things that you'd like to implement in your business, strategies, processes, procedures, if you'd like to discuss these principles more, feel free to give us a phone call. You can reach us at 801-265-3777, or you can visit us at universalaccountingschool.com. And always remember this, if it's about accounting, it is universal. Take care, be safe out there, and have a great day.